Hello everyone, Fund Inspector here, currently in Ho Chi Minh City, or as previously it is referred to as Saigon if you know your history books. It is very, very, very warm and humid here, and the Fund Inspector's been in a few places. Was in Dalat, that was quite nice. We done like Lujan, Mario Kart racing. We were in Da Nang, which is like a beachside town. There was lots of it's famous for like the surfing etc. there, but the weather wasn't great, so we couldn't do that. And we are actually, this is our last night in Vietnam, and then we are off to Cambodia. I'm buzzing for some of the places we're going there. It looks it's going to be brilliant. Fund Inspector will be at obviously Angkor Wat. We're going to Koh Rong Samui, which is an island. You should just look at that, look at the crystal clear waters. And we're also going to Phnom Penh, which looks quite developed. I don't know what's there really. Quite sad, obviously the killing fields etc. we'll visit. But anyway, let's just share some of the videos that pictures I've been up to. Like, here's some of the tunnels that were used during the Vietnam War, or as they call over here the American War, because the Americans basically started it. And we can also see some other things, so yeah, enjoy. Alrighty, that's enough. Let's just get on to this fund review and let's talk investments, baby. T Rowe Price US Blue Chip Equity Fund managed by Paul Green. I know nothing about Paul Green, to be honest. Let's just get on to this fund. Let's just look at some of the review. Let's just get on to the ratings card this week. First one is not scuba diving, it's snorkeling. I love snorkeling, and I can't wait for some of the islands that we're going to now. Crystal clear waters, absolutely roasting temperatures. I'm buzzing just to buy a snorkel when we get to Cambodia and just snorkel all day, every day there. And also at the south of Thailand, we've got a couple of islands booked there: Koh Lanta, Koh Lipe, Phuket, Krabi, all that sort of nonsense. So I'm buzzing for that. Second good rating is Full Swing. This is a golf documentary on Netflix. It's had 2 seasons. It's just released a 3rd season, so I've watched some of it. It's good. There's some people in it that I just can't really warm to. It's quite good to see the insights of the everyday life on the tour. And yeah, if you're a golf fan, it's a good watch. It's quite interesting, and definitely worthwhile watching. Third one, okay, it's Tesco right now. Tesco would actually get a terrible rating or a bad rating if it wasn't for the club card. Obviously one of the biggest scams in the UK, because they use the club card basically just to track your spending and to try and get offers aimed at you. But they basically are inflating prices to then make you get a club card, and I don't like that. That's a sneaky tactic that obviously they think people aren't very aware of, but most people are. Anyway, just when it comes to the quality of product and also the prices of things, it's not best, but it's not the worst, so it's okay rating. Fourth for bad is a Fiat 500. Absolute shocking car, basically a death wish if you drive one, made of paper, and I'm not a fan of it. Now, the terrible one this week, and it's relevant to what I've seen this week. I was actually tempted to put the Brit Awards in, but I didn't. I put the Oscars in. Who actually cares about the Oscars these days? Genuinely, make your own mind up on movies and come to your own conclusions. The Oscars is basically like a secretive little club that, basically exclusivity, prestige, and I don't like that. I'm sorry, but the Oscars, get rid of it. We're in 2025. Who actually cares about it? Not me, anyway. Okay, so if we go on to the performance of the fund, the benchmark of this is S&P 500, which is expected because essentially this is only investing in US blue chip equity, right? So over the 1 year, it's done quite well. Good rating, so it gets a full swing. And I've just realised I forgot the charges in this fund. I'll go back and do that in a second. Medium is being an excellent performer actually against the benchmark, 55% up against 42. Can't complain there. And then over the long term, it's been okay, slightly behind benchmark. Now, this is the one here, right? And I'm tempted. I'm going to say it, right? Why would you buy this fund when you could just buy the SPY, the S&P 500 for a fraction of the cost? This is 82 basis points, 0.82%. They're taking 8.2 million to manage this. But if you actually look at some of the holdings, right, I know he's got to basically get a selection of like, and he's got to do the weightings and stuff. But all of these here, the top 7 names are in this, the top 7 names in the SPY, and he's just basically overweighted at 4 of them, and he's underweighted. Well, I think they're about right, to be honest. So he's very much in the what we call the magnificent 7 stocks, and then he's actually just got Eli Lilly, Visa, Mastercard, but again are in the top 15 names of blue chip. So some people might say this is the easiest actively managed funds you can get, because essentially he's just going in and picking basically the top names in the SPY and just slightly altering the weightings and what he thinks is going to basically outperform the benchmark. So it's not really a stock picking exercise here, it's more of like a weightings exercise, I suppose. Anyway, that's what some people might think. And yeah, the charges are okay for a actively managed fund, so it gets an okay rating. Now, actually, favourite time, right? So this one here is actually going to be quick because I've already explained. So, like I said, there he's got 7 of the names in the top 7 stocks in the world, right? And he's just obviously altering the ratings to a maximum, like probably 10%. He's trying to keep in most of the names. So I do like some of the weightings here, to be honest, and I do quite like this fund. So Apple, right, obviously I guess a 1. What is that this week? Scuba snorkeling. Amazon, again, gets a 1. So basically all these Mag 7 stocks are going to get 1s because I like them. Nvidia is actually, you've seen Nvidia's earnings were last week, and they were actually quite good earnings, but the markets didn't really like them. It dropped to about 115. So people could use that maybe as a wee buying opportunity if you want to get in there. But I still think the Mag 7 is overvalued. I think it will pull back. I think probably the end of this year, latter half of the year. And I can't wait for it, because I can't wait to absolutely hammer some of these names in my own portfolio. Microsoft and Alphabet being the 2 that Fund Inspector will be hammering if I see the right price. Which, by the way, the right price for Microsoft, if I was to go down to like 320, like low 300s, probably say 300, and Alphabet was to go down to about 110, which is currently like 160 or something, big amounts will be going in there. Nvidia 2, still I think a bit overvalued, but it's going to be a good one. Meta, it's got a good, like the weighting here, it's a great company. Don't know if I like the valuation at the moment. $660. I think it's still good. It's still good. Right, it's not getting okay for that. Alphabet, love it. 1. Tesla, right? I'm not a Tesla fan at all. But like I said, it probably will do well. It actually dropped a lot. I don't know if you've seen it. Missed the European sales on the Tesla cars were poor. It dropped quite a lot. I think it was maybe down like 30% last week. So again, not a fan of it. I'm going to give it an okay rating, even though I don't like it. Eli Lilly is a great company. I've had that in my own portfolio. The pharmaceutical beast. Now, Visa is the one I'm going to talk through today. So if we go into the Visa chart, you can see here over the 5 years it's up basically 100%. So it's been good. Over the 1 year, it's up 27%. And one of the key things here, the ratios, beta is 0.95, so this is quite a low volatility. The market cap's at $700 billion, and also the price to earning ratio is a bit high at 36.64. Earn per share 9.90. The 1 year target they've got is 370. Alright, so it's not too far off that. It's not really paying much of a dividend. So for me, if I was an analyst at the moment, I would be saying this is a hold rating. It's not a buy, it's not a strong buy, it's not a seller, it's not a strong sell. It's probably trading okay as a hold. So, do I like it? That's the main thing. I do love Visa, but I don't like it as a buying opportunity at the moment. Actually, I don't really like much of this at buying opportunities right at the moment. So, again, it gets an okay rating, even though it is a good stock. And then Mastercard's pretty much the same as well, so 3. Overall fund rating, right? Is it a good fund, right? Undoubtedly, it's probably always going to be a good fund, because essentially it's investing in the top US equity, right? Blue chip equity, and that tends to do well. What the argument would be here is would you not just buy the SPY, the S&P 500 tracker, or this fund where you're getting charged 0.82% on. Now for me, I would buy, in all honesty, I would buy the SPY here. I would buy the S&P 500. That's why I don't think it's great. It's an okay fund. The performance returns are brilliant, but again, would I buy the SPY or would I buy the fund? I'm sorry, but I'm buying the SPY. Percentage of the portfolio, solid 5% on that. Okay, that's this fund review done this week. I hope you liked it. Give me a comment, give me a like, give me a share, all that nonsense. And remember, keep talking investments, baby.